All right, what is going on? Looks like we are live. The market is going through some volatility today. We've got an intraday market crash. Looks like it's bouncing back. We can pull up the charts here. We've seen it even turn green on the day now. So big recovery there. We'll see over the next hour as we continue this live stream if we close above the close yesterday. But so far, that's a pretty good look, pretty good flush out. Buyers coming in and scooping up those deals, scooping up the lower prices there. Gold and silver kind of flat, Bitcoin kind of flat. Do we have a bad connection again? Can you guys see and hear me all right? Audio and video are good. All right. Well, throw it in the chat. Let me know if it starts glitching out again. Cool. All right. Well, go ahead and throw any questions that you guys have in the chat for me. I'll answer as many of them as I can over the next hour or so. Are we above or below the 50 week? That's a good question. I don't know. Let's take a look. All right, let's go back. Pull up the 50 and go to a weekly chart. Well above the 50 week. That yellow line, there's the 50-week moving average, simple moving average. This is the daily. So we are just today bouncing off the 50-day moving average, similar to about 1 month ago in October, early October, when we had that one big down day. Just so you guys can see where the 200 is. It's right there. We had the last golden cross in July. So that's where we're at in terms of the compared to the moving averages. What is the meaning of life? That's a good one. How do you creators monetize from live streams on YouTube versus normal videos with ads? That's actually a good question. As you might be aware, I am brand new to live streams. I have never done live streams before, like 2 weeks ago. Trying to ramp up the frequency. I think on the replay of the lives, like if you go and watch a live stream after the fact, like after it's already happened, you're not watching it live, you're just watching it like a regular YouTube video, there's going to be ads like normal on that. I don't think, and you guys can correct me if I'm wrong about this, I don't think there's any ads that play during an actual live stream. Unless you guys are somehow seeing ads here and it's kind of delayed for you. You come in, maybe you click on it, plays an ad first before it allows you to enter. I don't know, but in terms of live streams, I think it's just after the fact ads, and I honestly I don't know why it seems like YouTube is kind of pushing live stuff a little bit more recently than it used to, because I don't think the monetization is as high. I guess the difference it would be made up for with the longer video, because one of my regular YouTube videos would be like 10-20 minutes. A live stream will be like an hour, sometimes up to an hour and a half. And so there's a lot more chances for ads in there. I don't know. But it does seem like there's a bit of a reward, not a financial reward directly, but a little bit of a boost that YouTube is trying to push live streams right now. So that's why I'm trying to do more of them. But also it's like at the end of the day, there's no such thing as the algorithm, because the algorithm, it's trying to do is keep viewers on the platform longer. And so it's constantly just trying to figure out what people want. That's all it is. And so it will push what it thinks people want so that people will stay on the platform longer, which means that as a creator, all you're trying to do is also follow along the algorithm, which is just what do people want to see. And so that at the end of the day, like there's going to be changes over time. Like obviously YouTube videos today look very different than YouTube videos 10, 15 years ago. But at the end of the day, it's just make stuff that people want to consume. And yeah, that's the secret to any business. Make stuff that people want to consume, and what they have to give up in order to get it is a worth it trade to them. All right, let's see here. Is the market pricing in the government reopening over the weekend? I don't know. So this is something that I've been talking about over the past, I don't know, probably 2 weeks, because a lot of people have been asking me if I think there are any good ways to trade or to play the shutdown ending and the government reopening. And apart from just being a short-term trader and trading the volatility, I don't think there is, because markets are future discounting machines, which means anything that is guaranteed to happen in the future will be priced into the present. And it's just the timing of that is unknown. And so there's a little bit of a little bit of lack of certainty that is causing the volatility in the markets right now. Also, the liquidity being drained out of the system, that's the biggest factor. Um, but but ultimately, the market or the government reopening is priced into the market already, because it's a guaranteed to happen. It's not a maybe it will happen. It's just a matter of when, not if. Um, so when the government does end its shutdown, I think I think that'll probably decrease the current volatility we have. But the main reason why is because, number one, we have liquidity getting sucked out of the system right now. I made a whole YouTube video about this, so I won't go super into detail on it right now. But the Treasury General account is the government's checking account. It's increasing very rapidly right now because they're still taxing and borrowing, but they're not spending as much as they were before. And so there's a lot of cash leaving the financial system to go sit in the government's bank account right now. That will all get reversed once the government shutdown ends, because they're going to have to pay out everything that they haven't paid out yet for all the people's paychecks that have just stopped and all that kind of stuff. So, so all that liquidity will re-enter the system. So net over long-term time period, there is no result. There's no net effect from this. It's just short-term issues. The other thing is that there are probably a lot of people who are not getting paychecks right now, who are having to stop buying, stop investing, stop paying for, purchasing stocks, and maybe even selling in order to, fund, week to week. To be honest, like, I think it's 60%, maybe it's closer to 50% of Americans live paycheck to paycheck. Like if an unexpected expense comes up within the next month of over $1,000, most Americans say they would not be able to afford it without using debt. So when you have a bunch of people who work for the government, there's probably a good chunk of them who are not prepared for an unexpected expense, even though government shutdowns should be expected, and are having to draw down on stocks or other things like that, and are not making their 401k contributions and that kind of thing. So that's all contributing as well. All right, let's see here. The benefits of investing into a regular brokerage account versus a tax advantage retirement account for some people. This is something that is probably like not a controversial view of mine, just not like a very widely held view or very popular opinion. Um, I think the decision to use things like IRAs and 401ks versus taxable brokerage accounts comes down to the likelihood of you retiring early, basically. So if you are not even retiring early, actually, just let me give you an example. I personally had a significant amount outside of my retirement accounts when I quit my job as a stockbroker and started Heresy Financial. That allowed me to use those funds in order to last. It took me a year and a half before I made enough money to pay the bills once I started Heresy Financial. So that allowed me to be able to survive that long, and eventually get to the point there where I was able, that my runway was very long. And if all my money would have been tied up in my 401k or IRA, I would have had to take big penalties and hits on that if I was going to draw down on that. And so if you are planning on starting a business, if you want to be an entrepreneur, or if you are an entrepreneur, I think the advantages for holding your money up into a tax advantage account for the next 30, 40 years, if you're young, is there's some extreme costs that you might not be considering there. So if you are the type of person who's starting a business, who's entrepreneurial, who's constantly trying to do things, who's planning on quitting your job, starting your own thing, that type of thing, there's a big advantage to having access to your money. The other thing is if you are making a significant amount of money, um, have a large income, and your potential retirement date, in other words, when you would have enough money that you wouldn't have to keep on doing the job that you're doing if you don't like it. Um, if that is really, really a lot sooner than 60, that's another thing you have to consider because if you get to the point where you've got, 3 million bucks and you're 40 years old, but it's all in your retirement account, you're not financially free yet. Um, You could be if that was in a taxable account. Obviously, there are higher costs with that as well because you don't get the tax deductions along the way, and you have to pay capital gains along the way. And a lot of those are probably going to be short term, which means you're paying income tax on those. And so it will be more difficult to grow your wealth faster in a taxable account. But it's not always a case closed, put everything into a retirement account because government locks it away. And if you want to touch it, then you're going to pay a big penalty. All right. Let's see here. How do you manage the bifurcation between the markets and the economy? Hmm. Depends on what you mean by manage. Um, if you're thinking, how am I like mentally wrapping my head around the two? It's like it happens all the time, and it's always kind of happened like this. The markets and the economy are very separated from each other. Obviously, there are big periods of time where they they'll come together and they'll both go down or they'll both go up together. But especially in the short term, their performance there is wildly different. And one of the reasons why is because when you talk about a bad economy, usually if it's unless it's like a crazy type of crash, it's gonna hit the low end the hardest, or at least first. Um, and those are the people who don't have any extra. They're not investing in assets. So it's like when there's difficulty for the low end of the economy, and when I say low end, I mean when like measuring income and wealth, that's not going to impact the markets because they don't have anything to sell. They don't have any. They weren't buying before, so they're not. It's not like they're stopping buying now. Um, and so for short term, uh, you know, bull markets, bear markets, recessions, periods of growth, um, there really doesn't have to be that much crossover between what's happening in the overall economy versus what's happening in the markets. And in the whole middle, everybody who's working, more stable jobs, not at the top end, I'm just talking about the entire middle, they're all throwing money into their 401ks. And so unless there's widespread unemployment, like everybody is getting laid off, it's like that's going to push the markets up. The vast majority of the reason why the markets go up is because people keep on getting paid and people keep on putting a small percentage of their income into their retirement accounts. It's the vast majority of the reason why the markets go up. Stephen, I think his name is Stephen Green. Is it Stephen Green? He goes by Professor Plum something on Twitter. He talks about this a lot. It's the index fund bubble. Basically, markets go up because index funds get bought just because there's money to buy. There's very little attention being paid to value or fundamentals. And at some point, that trend does have to reverse when if and when demographics change and more money is getting sold, and it will be sold indiscriminately again, regardless of value or fundamentals. And so that snowball that pushes asset prices up through the index fund bubble by itself, uh, that will reverse at some point. Um, but it's probably a lot further off than I wouldn't imagine something like that would change within the next at least couple of years, probably decade or longer. What are your thoughts on the markets having one last bullish pump before the dump? I mean, markets are at a wall of worry. I don't know if it's still there, but earlier in the day, the fear and greed index was down at extreme fear levels. Um, we're entering into an easing environment. The Fed is going to stop QT December 1st. They're reducing mortgage-backed securities to pump more money into T-bills. Government's deficits expanding, spending growing. Um, I don't know. When you say one last bullish pump, I think that's what a lot of people are expecting. We're going to have like a blow off top here before a big crash. We've had three 20% or more stock market crashes in the last 5 years. So that alone is like unprecedented. So I don't know. I think we might have a lot longer to go up than most people are expecting. All right. Do you have an opinion on the potential fallout of a SCOTUS ruling against the Trump tariffs, potential clawback of collected revenues? Um, I don't necessarily have an opinion about the potential fallout. Tariffs are a tax. I am anti-tax. I think the smaller the government, the better. The less they take from us, the better. The less they regulate our lives, the better. The more they let us do what we want and keep what we have, the better. And so I think if Supreme Court rules that tariffs are unconstitutional and there is a payback, I think that's going to be better for the economy overall, better for the markets overall. Um, it does. I'm not. It looks like they're pretty committed. So if SCOTUS does rule that way, then they might try and try some other things to keep it going. So we'll see. All right. OpenAI wants $1 trillion in loan guarantees. That's a little bit of a headline miscommunication. Um, the loan guarantees that Sam Altman was talking about were specifically with things that the government is asking for help building or the government is trying to invest in. It wasn't Sam Altman asking for loan guarantees for like OpenAI. Um, so that little bit of a nuance there that I think is important. I'm not a huge fan of of OpenAI overall and Sam Altman overall, but that I think that is an important distinction. Just had an ad during the live stream. All right, well, there's your answer. I guess there are ads during the live stream, so that is one way that the lives are monetized, which I guess is now just very similar to a regular video. Then, because if you get an ad during the middle of a live stream, that's just like a video. And if we go, we're going to go for an hour or longer here. So there's probably more opportunities for that. Do you see this pullback as a buying opportunity? I mean, this is my opinion. This is not advice. I personally did move some cash in off the sidelines into the markets today. Traded around this. I'm trading around this volatility this whole time. So personally, I do. But I mean, if it could very well dump more from here, and then I'll be sitting on that for a little longer. So I think this is a good little pullback, but I could be wrong. All right, watching closely the market close, great recovery of the S&P. I haven't pulled it up in a second, so let me do that here for you guys, so that anybody who's not in front of a chart. All right, yeah, look at that. So let's go to a 1-minute chart so we can see. Let's take off these so that it makes it full screen. All right, so this is all the intraday price action. So markets opened up right here, dumped, recovered, are back above the open. Got a nice little candlestick wick at the bottom there. I would like to see us close above the close yesterday to feel very strongly bullish on this. We probably won't, though. We'll see. All right, let's go back to the chat. I didn't know you could increase speed. Yeah. So, all right. So you just said you're watching at 2x speed since you came in late. I did not know you could start at the beginning of a live stream while the live's going, and I did not know you could watch a live stream on 2x speed. That's pretty cool. I'm learning along with you guys. I'm brand new to live streams. I haven't done this before, a couple weeks ago. So a couple of you guys are saying my audio sounds bad. Is that everybody? Does my audio sound bad for everybody? Maybe I need to change something. Let me know. No, it's fine. All right. So it must be just for some people. All right. Do you trade on the 2-minute a lot? No. So trading, this is something, if you guys are going to actively trade, you want to use what is most popular. Part of the reason why is because if you're actively trading, you're going to be using technical analysis. You're not going to be actively trading based off of fundamentals, because the fundamentals don't change that quick. But all the fundamentals are priced in. Technicals are just visual representations of what is happening in the economy and the markets and the fundamentals. And so you recognize patterns that happen over time, that repeat, because human nature is what drives human decisions. Human decisions change prices, and human nature doesn't change over time. And so, with so much money trading off of standard things like 200-day moving average as support, or 50-day moving average as support, or breakouts from wedges or bear flags or whatever it is, there's a lot of money trading on those things, which moves markets, especially when it's like, okay, we bounced off support. That means, we're going to buy here because we're bouncing off support. Well, everybody buying there drives the price up. So it's a little bit of a self-fulfilling prophecy, which means if you do back testing or whatever, and you find, oh, the 2 minute chart, the 2 minute 200, the 200-minute moving average works better than the 200. If you're on the, sorry, if you're looking at the 200 simple moving average on a 2-minute chart, and you say, oh, historically that has worked better as support than the 200 simple moving average on the 1-minute chart. It's like, maybe going forward that's true, but maybe you're just overfitting based on back tested data that is not. It's a correlation that just happened to show up in that period of data that you were looking at. Um, and so you want to, as much as possible, stick to what is used as much as possible. You have the most likelihood of success that way, because there's money that moves the markets that's trading off of those things as well. Okay, let's see here. When the top 10% of wealth and earners make up 50% of spending, the economy can be sustained on life support for a long time. Yeah, that is true as well. The top 1%, especially the top 10%, makes up the vast majority of spending that happens in the economy. So, yeah, that is true. All right, let's see here. Oops. What's the next question? Any thoughts on the New York City mayor issue and business possibly moving out of the state? I don't think most of what he campaigned on will happen. I'm sure he'll probably start a couple little grocery stores. There will probably be a couple free bus routes. Um, it's I don't think he's going to do anything that's going to significantly change anything. Maybe there's a couple buildings that he's able to get rents frozen on. Um, there and I don't think there's going to be any sort of a mass exodus of business people or wealth out of New York City, because really probably nothing's going to change. I think most of this is the first step in a long political career for him. Um, and it's not, politics does not have anything to do with results. It just doesn't. It only has to do with having money behind you to help you campaign, number one, and number two, saying the things that people like and want to hear. It has nothing to do with what you do when you actually get in office, for the most part, especially at those low levels. So I don't think anything's going to happen there. All right, EB, thank you for the super chat. I appreciate it. Is there a universe in which a severe U.S. Treasury basis unwind collapse would not result in massive money printing, bank bailouts, inflation due to hedge fund leverage? Well, in a rising interest rate environment, that's something that is typically going to be more of a concern, especially if it's unexpected, which is why that happened going into, like, from 2021 to 2022, because funds and banks had loaded up on treasuries at 1% or lower, because they believed the Fed when the Fed said we're not even thinking about raising interest rates. And then inflation got just way out of control, and I don't know why they didn't expect it, but they should have known. When you print trillions of dollars, shocker, it makes prices explode. And so then they had to start raising rates unexpectedly then to try and deal with that, and that caused a lot of trouble. In an expected, announced well in advance, very slow falling interest rate environment, it's not really a concern. Now, over the long term, because the government will have to continue to finance its spending with lending, or I'm sorry, borrowing more and more and more. The when you borrow money, it is being borrowed into existence. Dollars are lent into existence, and you suck the liquidity out of the system. And so that's what happened in 2019. There was just not enough money because the government had increased its borrowing so much, and that's why the repo market spiked. It was just sucked dry. That happens over and over and over and over again. And so eventually the central bank has to monetize that and replace that debt with newly created money. So that will happen again, but it's just the Fed is just going to slowly start to monetize that debt over and over until the next big crisis when they monetize a lot of it very, very quickly. Okay, let's see here. Next question. Um, how are bond yields less than the CPI in some countries? Because if you let's say well, number one, it's part of it is because you have central banks buying the debt. So they don't care what the CPI is. So buying that debt pushes those yields lower than they would be otherwise. Number two, it's because banks are buying that debt and banks get to loan money into existence. And so if you do that with leverage, then your return on your capital can be higher, even if the return total is, you know, on each thing that you're buying is lower because you're leveraged. But number three, it's because of the long term expectations. And so, for an example, let's say right now inflation is 10%, and you could buy bonds that would pay you 3%. And let's just say for certain, and these bonds are 10-year bonds, let's say, for certain that in 2 years, the inflation rate will be down to 1% and it will stay there for the next 8 years after that. Well, then you're still probably very likely to buy those 10-year bonds, even though right now they're lower than the rate of inflation. They're paying you a yield lower than the rate of inflation. You're locking in that yield that by the end of that full 10 years, you're going to have a return that is in total well above the rate of inflation. So it's just based on that the future expectations of what inflation and growth and interest rates will do are baked into those. And so that's why those three reasons are why you have yields go lower than the CPI sometimes. Let's see here. Is the tech sector cooked? Should we just start retraining now? Asking as a currently replaced tech worker. Okay, so look this up. I don't have it in front of me. Maybe I can find it while I'm talking to you. The Google just released their list of like the companies that they think are at risk, not companies, jobs that they think are at risk from AI, and then a list of jobs that they think are not at risk from AI. Google AI jobs risk list. Let's see if that pulls it up. Okay, yes, let's pull that up. Let me share my screen. Share window. Okay. Zoom in. Okay, so these are the jobs that Google thinks AI will have the easiest time replacing. And let me zoom in on this. Just it's not quality. You'll probably have to pull this up yourself. But we've got interpreters and translators, which is like, okay, that's an obvious one. Historians, just gathering data and collecting it and making it easily accessible. That makes sense. Passenger attendants, not sure what that is or why that would be replaced by AI. Is that maybe an AI robot? I don't know. Sales representatives of services, that one might be difficult because you have to so far I don't think AI has done a good job at all of being able to imitate or replicate a sales rep, but maybe that will change quick. Writers and authors, that one makes sense because that's basically what AI does is it writes. And so you can input raw information, it can then distill it and change the voice and add facts and make it look pretty. So that makes sense. Customer service reps, I think that one's easier than sales. It's basically just handling issues that pop up. Usually it's like 90% of customer service uh, calls or requests are repeats of the same things. And so you just train something to be able to handle the same thing every time. That's super easy. And then you have people standing by to do the 10% of stuff that's unique. CNC tool programmers, I don't know anything about that. Telephone operators, makes sense. So a lot of these, it's like, okay, if you are in the job of gathering, curating, and communicating information, like you're in trouble because AI is really good at that already, let alone in the future. Proofreaders, copy markers, editors, business teachers, public relations specialists. So all data scientists, all these, it's like, okay, well, yeah, that's like dealing with information basically. And then the job list that they came out with and said these are safe from AI, at least for now. You got phlebotomist, that's they draw your blood. Okay, obviously that makes sense. Nursing assistants, that makes sense. Hazardous material removal workers. It's like unless we get some really good robots from Tesla soon, that makes sense. Basically, all these are ship engineers, tire repairs and changers. These are all like jobs that deal with physical things. So and part of that is just because of the complexity of dealing with the physical world is just through the roof, compared to organizing information. So you can look those up yourself if you want to look at the whole list. Um, but those are the jobs that at least Google thinks is are at risk. So one thing that if I were in that position, I would think about would be number one, how do I constantly learn more skills that are currently still in demand from the market? Um, Number two, how do I learn skills that are complementary and that stack together in order to make myself exponentially more valuable to somebody who needs to pay for those skills? Um, because if you can in a week or 2 weeks be trained to do the job you're doing, then it would be very easy to train a program to do that and replace you. Um, and so if you have if you have multiple skills that you can stack on top of each other that complement each other, that every skill you stack on top of that makes it more and more difficult for you to be replaced by a computer program, and it makes you more valuable. So it's not a hard answer, but that's the way that I would be thinking about it. For example, when I quit my job as a stockbroker, in my mind, I was thinking, okay, well, I I am worth way more than hundreds of thousands of dollars per year to my employer because that's how much they're paying me. And so they're obviously profiting by keeping me as an employee. So my skills are being able to, help people make the right financial decisions with their money, communicate, sales, um, explain complex topics in a simple way. And I was like, if I'm worth that much to them, then I'm worth at least that much just to myself. And so I quit my job and I started Heresy Financial. And I learned very quickly that a waiter without a restaurant is useless. And so you the so I thought that I was the one bringing the value, but my value, my being worth hundreds of thousands of dollars was only true because I was pairing my skills with what the company already had to offer. And so by pairing those, yes, I was worth that much, but not by myself because I didn't have the other stuff. And so like a waiter is like, okay, maybe I should be worth 60,000 or 80,000 or $100,000 a year. And it's like it depends on what restaurant you're paired with. If you're a waiter at Olive Garden, you're not going to be worth as much as a waiter at I don't know, the Capitol Grill or Ruth's Chris or um, uh, another nice steakhouse, another nice restaurant. And so if you want to make yourself more valuable, you need more of those skills yourself. And so for me, then I had to learn other skills like hiring and project management and video editing and talking to a camera and that's very different than talking to a person and video editing and things that I had to learn these other skills that once I finished my skill stack, then it was like, okay, boom, now I'm worth more than I was before. But I needed more skills to learn. So that's the lens that I would view it through. Okay. Where was I? There's looks like a lot of questions have come in since I started talking. Okay. I'm gonna try and get them all, but let's see here. Michael Burry is shorting Palantir and Nvidia. If you were to short it, what would your strike price be? Um, that's a great question. I wonder if I can just tell you. I think I still have some puts on Nvidia. I do have some puts on Palantir. Again, this is not investment advice. This is not trading advice. This is not a recommendation. I'm just answering the question. Somebody asked me what I have or what I would do. Let's see here. I've got some 80 strike price puts on Palantir. And none on Nvidia. Nvidia is actually not that overvalued. Their PE is only 55. I know it's crazy because they're $4.5 trillion company now, but I don't know. If I was going to buy puts on Nvidia, probably looking at like 160 below support, but not too far down. Where if it has like a let's see, yeah, like a 20% drawdown from where we're at right now, then I would still be able to profit. But you'd have to look at that and see how much those cost because it might not be worth the cost given how much you think it might fall. All right, let's see here. What other questions? Yeah, janitors were not on that AI list. Um, is there a direct correlation between the M2 money supply and Bitcoin price? Well, there was before, and as of a couple of months ago, it doesn't look like there is anymore. So unless the Bitcoin price just skyrockets soon and catches up, then it looks like that correlation is broken. A lot of correlations are found in back testing and looking through old data, and usually once they are found, they stop working. Um, like I don't know, it happens a lot in sports where it's like, oh, every time it's a leap year, the Red Sox end up losing in the fourth game of the World Series or something, or the third game, I guess it would have to be, or the fifth game. I don't know. So I think the M2 7-week lag or 10-week lag compared to Bitcoin was probably a lot of that. Let's see. A little suggestion for your lives. If you can talk about main sentiments of the markets and then taking questions, it would be more beneficial for your followers. I don't know. There's a lot of questions coming in, and I'm talking about my main sentiments for the market while those questions come in. So there would be a lot of questions stacking up, I think, if I did that first. How will the Fed letting mortgage-backed securities run off their balance sheet affect the mortgage-backed securities market? Will there be another flood of notes? No, they're going to let them bleed off at the same pace that they've been bleeding off this whole entire time. I wonder if I can pull up that chart for you. Uh, balance sheet, mortgage-backed securities. Yep, here we go. Okay, let me show you that. All right, so here's the chart. So you can see ever since 2022, they've been letting mortgage-backed securities bleed off their balance sheet, and that pace is going to continue. It'll continue moving down. And instead of just their balance sheet going down, they're going to roll that money over into T-bills. So nothing's change. Nothing is going to change in regards to how they've been influencing or impacting mortgage-backed securities overall. That same level of selling pressure and upwards pressure on rates is going to continue. What is your opinion on the dollar going back up? For the last, like, I don't know, probably 2 months, 3 months, I've been bullish on the dollar. I think it's been oversold. I think it'll get back up into that range where it was before between like, I don't know, what was that range that it was in? 100 to 110. I think this is just a temporary dip below that level. Okay, let's see here. What camera mic setup do you use? It's well done. I don't see any links to any of your setup. Yeah, I used to put links to my setup up, but there's not that many aspiring content creators that watch my stuff, and so it's just kind of useless. The camera that I'm using right now, ready for it? It's my iPhone. If you have a newer MacBook and a newer iPhone, you can just wirelessly use your iPhone as your webcam, and it's better than 90%. Well, it's better than 100% of actual webcams. The only thing that I found that is better than using your iPhone as your webcam is using a like a DSLR or a mirrorless camera. Set it up far away, put like at least a 30 millimeter lens on it, and zoom in all the way. Make sure it's set up far away and have a background that's far behind you. That's really the only setup that tends to look better than just using the iPhone as your webcam. Let's see here. The microphone that I use. This is the Shure. Uh, I don't know. It's the one that I use for YouTube is the SM7B, but that one requires a cloud lifter and a an audio interface. This one is a USB mic. It can work with audio interface as well, which is actually how I have this one set up. But it's a USB mic as well, so it's a little bit of an easier, quicker setup. Um, let's see here. What is my best trade that I've ever made money on? Um, so far this year, I had a 1,500% gain on um, Oklo nuclear company. Last year, it was a 1,299% gain on MicroStrategy. All right, let's see here. I think you should interview politicians and bring up the expert predictions of major job losses from AI in 2 years. No one is talking about what humanity is to do when they're everybody is talking about what humanity is going to do when AI takes over. That's literally what everybody talks about when they talk about AI. What do you mean nobody's talking about that? That's literally the talking point with AI in Congress to politicians. That's what everybody is talking about. That is the reason why Congress and everybody is pushing for bigger government and more regulation, because they're fear mongering, saying it's going to wipe out everybody's jobs and everybody's going to be jobless. And so, what do we need to do to regulate this and start universal basic income so that everything doesn't collapse? It's the most preposterous take I've ever heard, because there is no fundamental qualitative difference between AI and any other technology that's ever existed throughout history. It's no different qualitatively than the internet, no different than the industrial revolution, no different than the agricultural revolution, no different than fire itself. Every technology, the only thing it does is it amplifies human output. outsources human labor and time to something else that takes over, and you get more output for less input, and it allows humans to interact with the world in a more productive way. That has never been bad for humanity in the past, and it will never be bad for humanity in the future. The more we get technological deflation, which is getting more for less, more output for less input, we outsource human labor of things that people don't want to do, frankly. When you go to your job every day and you have to click buttons, do a meaningless job, sit in a cubicle, type out emails, and attend meetings, you're not performing a meaningful job. People who had to be in the mines all their entire lives 100 years ago, that was not something that felt like a meaningful job, but people had to do those jobs because they had to make a living, and that was what they could do because humanity hadn't figured out a way to outsource those things to machines yet. There's no qualitative difference between that and what's happening now. And the only thing that will make it actually cause human suffering is government regulation, is governments trying to stop it, is governments trying to bail out the people that lose their jobs, because fundamentally, that is bailing out and subsidizing failure and loss. It is wealth destruction. If we can have a way to outsource that labor, outsource that human output to machines and get more for less, that's better for everybody. And if an individual decides that they don't want to learn new skills to adapt, that's on them, but it is not the base case, and it is not the majority of the case. It used to be anytime there was a calculation done, you go watch the movie Hidden Figures about the black ladies at NASA for getting on the moon. They were computers. There were these jobs everywhere with every financial institution, every auditing, every tax accountant, CPA, everybody. You had to do computing by hand, write down your calculations. That was what a computer was. And everybody thought, oh, when computers, the electronic things and calculators get invented and start being widespread, it's going to put all those people out of a job. No, it didn't. They just became the programmers for the computers, and their output skyrocketed 1,000% or more. So this has always been happening throughout history. It's always better, never worse. It is fear mongering, and I hope people don't lose their minds about this, because it will set us back years or decades if we start to try and stop it and regulate it, or bail people out through UBI, or enforce jobs and outlaw layoffs from AI or anything like that. Okay. Next question. All right. Um, where were we? How would universal basic income work, and is it even possible? I mean, technically, yes, it's possible. All they have to do is say, okay, we're just going to hand out a check to everybody every month, no matter what. That's technically what universal basic income is. And so, if you run the numbers right now, the government spends $7 trillion per year. And 4 trillion of that is on the mandatory expenses, which is the big four. It's Social Security, Medicare, Medicaid, and military, and interest on the debt. So that alone soaks up all tax revenue. So it's the rest of all the spending that's the discretionary budget, and that all is has to be borrowed. All right, so if you do the math and you say, okay, there's 300 million Americans, and we're going to give each one of those $1,000 a month and multiply that over a year. That's $3.6 trillion. So where's that money going to come from? So then you have to say, okay, well, it's needs based. And then it's like, all right, well, that's going to cost a lot for the implementation. And then it's like, okay, well, now you're incentivizing at a certain cutoff point people to not work, because it's like, all right, well, now if I get a job, I'm going to lose my benefits. I'm actually going to be worse off. So there's all sorts of problems with that as well. I'm hoping that it never happens. But it is possible that they um, try and make it work through printing. Do you miss corporate life? Zero. In fact, when I was going through starting Heresy Financial during that first year and a half, when I wasn't making any money or making enough to pay the bills, um, I regularly had the thought, like, I am so much more satisfied and happy doing what I'm doing right now that even if I never make anywhere near what I was making before, which now I make a lot more, but even if that never happened, I would have been perfectly satisfied, perfectly happy. In fact, there was a tipping point about 6 months in where I was like getting kind of worried because I hadn't made a single dollar yet. And I was like, I don't know what I'm doing. And so I talked with a kind of a mentor of mine, and I was like, just like, laid out the situation, what do you think I should do here? And he was like, well, if you have to go flip burgers on the side to just to help you pay the bills in order to extend your runway, would you rather do that? So you're trying to start your business and you're flipping burgers at the same time to try and get this thing going, or would you rather just go get a job as a broker again? I was like, oh, 100%. I would rather go flip burgers and extend my runway. He's like, all right, well then you should stick to it. Just milk this thing as long as you can. Bleed your runway out to zero, and if you're willing to do whatever it takes, he's like, then you know that's that's all that matters. And I'm really happy he said that, and I listened to him because that made me a lot more motivated. And within a couple of months, I started making money. Not enough to pay the bills, but it was enough to keep me going. So no, I don't miss it at all. All right, let's see here. I'm not Johnny Sins. Pets. I don't have pets. I don't like pets. um, I grew up with a lot of animals, and I think that just we had ducks and chickens and turkey and rabbit and dog and lizards and frogs, and I I think I used up all of my love for animals as a kid, cleaning out the chicken coop. All right, let's see here. Um, Biggest recession indicator is when a Heresy Financial saves on razors and grows hair. Yeah, that's true. If you ever see my, because I don't grow it on top anymore. So if you ever see me do the Danny DeVito, then you'll know. All right, let's see here. Um, couldn't people just continue to put money into the stock market even with bad financial news and businesses not growing, and the stocks will keep going up? Yes. Okay. So stocks go up when sellers are not willing to sell at lower prices and buyers are willing to pay the higher prices that sellers are demanding. That's what moves stocks up. Um, because for every transaction, there is a buyer and a seller. Otherwise, there can't be a transaction. If you just have a buyer and there's nobody to sell to them, then they can't buy. And so stocks move down um, when buyers are obviously wanting to buy at lower and lower prices, but they're not willing to pay higher prices, and sellers are willing to accept lower and lower prices to get those buyers. That's what moves stocks down. So it is fundamentally disconnected in the short term from the company's performance, from business news, anything like that. Um, the long term problem with that, though, is that ultimately you invest in order to make money. That is the sole purpose of making an investment. And so paying attention to things like the economy or joblessness or bad news or the company's fundamentals gives you an indication of whether or not your return on your investment will be worth it to you, which will cause you to either buy more or sell what you have. Um, and so long term, those fundamentals are what cause the buying and selling decisions. Short term, though, completely disconnected. Like nothing in the last 3 weeks fundamentally has changed with any companies in the stock market. I guess we're in earnings season now. So even though nothing has changed with companies, something has changed with what people know about those companies. But you get the point. Like the fundamentals of Amazon or Google haven't changed in the last 3 days, but they've been up a ton and down a ton over the last couple of days. All right. Let's see here. Um, I didn't live on a farm. My parents just really liked we lived on land and we had a bunch of animals, but I mean, maybe you could call that a farm. It wasn't really like a farm. It was, we ate our own eggs and stuff, but um I didn't like it. All right, let's see here. What's your take on MicroStrategy now compared to 2024? Do you think anything fundamentally changed with MicroStrategy in 2025? Well, number one, it achieved an insane premium over its net asset value compared to like the Bitcoin that it held. There are big bubble dynamics at play there. Number two, Saylor has been fully committed to, and he's continuing to sell into that. Like if investors are going to pay more for his shares than they're actually worth, he's going to issue more of them and sell more of them to buy more Bitcoin. Now, I think based on the current price, I'm pretty sure it's at its net asset value. I'm pretty sure the market cap is about equal to the price of the Bitcoin. Changes from day to day, but I'm pretty sure it's pretty close right now. So I don't think he's going to continue selling into that um, when there's no premium. So I don't. I mean, I think it's very different. The other thing though is that he's with the preferreds that he's issuing. It's like it is technically taking on a lot of risk, and the only way that he can pay all those dividends and debt and the debt service is by issuing more because they're not going to sell Bitcoin. He said he would sell Bitcoin if he needed to, but the plan is just to continue to raise more in order to pay, which sounds like it's similar to a Ponzi scheme dynamics, other than the fact that it's not guaranteed or it's not positioned as if it's guaranteed. Um, Do you think there are ways to improve the residential real estate market? As far as affordability, do you see any issues in how residential is used? Okay. I am obsessed with, I don't know the right word for this, but what I call single solution problems. So there are certain problems that seem massive, like complicated. There's all these downstream effects. And how affordable housing seems like one of those. But sometimes there are these issues where it's like, okay, if we could just do one change that's at the top of the stream, that'll have like a ripple effect and a snowball effect, and it'll just force everything else to get fixed, downstream of that. And housing is one of those. Although it's not a single solution fix, it's like a dual solution fix. The first one is the government exiting housing 100% completely. Um, so no subsidies, grants, or get guarantees on any mortgages. Because what that does is it artificially stimulates demand through making higher prices artificially more affordable. So in the short term, it's like, you get these programs for first time home buyers or whatever. It's like, okay, that person is helped out by this because they're able to now afford a monthly payment for something that they couldn't have bought before. But that is technically now demand that wouldn't have existed without the government interfering. Um, and so that artificially lifts overall prices. So getting rid of that means that you don't have a bunch of fake demand or forced demand through the money printer, essentially. The second thing that has to change is, well, we'd probably need at least statewide. This could fix it state by state, but even a nationwide ban on zoning laws and building codes. So hear me out because it sounds crazy. Zoning laws are a violation of personal property rights. Um, because zoning laws just tell individuals what they can and cannot do with their own property that belongs to them. And when you see how cities evolved in the past and grew organically before there were zoning laws, housing was continually getting more and more affordable because people could just build what they wanted. It grew dynamically. You had a lot of like walking neighborhoods, and then you had because people could just build up and then turn old residential into shops, and it's like you get a lot of what people actually want. I mean, ultimately, it's free markets at the end of the day because it's like if I produce something that people want, then we both have a profitable exchange because we're both giving up something we don't want for something we do want. And as that's allowed to happen in local communities, it creates these growing, vibrant, dynamic communities because that's what people are choosing where they live. And so zoning laws right now prevent affordable housing from being built because it is not profitable for home builders to build anything smaller than like a McMansion. Those are the only things that builders can build and then profitably sell because of zoning laws. The other thing is building codes. Building codes, I don't know if you're aware, they're not like produced by cities. They're produced by just companies and private organizations, and then they're enforced by cities and states. And so these building codes are constantly being updated and changed by the organizations based on just what will benefit them. So like different fire codes and stuff. It's like, well, there's no actual advantage for the end consumer to have this one brand of fire, of smoke alarms that that can that has this technology that's patented by this one company, but that company pays somebody off in these building code organizations that now have the city backing them, and now you can only build it with something that will cost hundreds of thousands of dollars instead of thousands of dollars. And so, building codes are violations of personal property rights, and so are zoning laws, and that is what prevents housing from being built in all of these cities and states where housing is just getting unaffordable. At the end of the day, when there's demand for something but no supply, it's because the government is stopping it somehow. And those are the two ways that it stops it. And if you think, oh, well, then all the neighborhoods are just getting to suck and they're going to be, dangerous because there's no building codes. It's like, well, number one, you won't be able to get insurance if you don't build your stuff to spec for what the insurance company wants. So they'll have their own building codes that will enforce free market through free markets that will enforce safety. And then number two, the zoning laws thing. It's like, well, you're only going to build what people want, and people are only going to build what other people want. And so if you don't like that, you move to a different community. And so it turns it bottom up. Anyway, that's a long rant, but that's the way you solve the housing crisis, and that's not going to happen. And so housing is going up. All right. Next question here. Are they going to reset the system by going back to the gold standard and revaluing our gold to today's price, 5,000 or maybe future price? And then, no, I don't think so. If we do see the government do a gold revaluation, it's going to be mark to market, at least first. So what that means is they're just going to, right now, the government allegedly owns a bunch of gold, and those the gold is held. The gold certificates are held by the Federal Reserve. So what will they have to do in order to do a gold revaluation is take those gold certificates which say, hey, gold is worth $35 an ounce, and they have to swap them out for new gold certificates that say gold is worth the gold that we have is worth, I don't know, $4,000 an ounce at today's current price. And based on double entry bookkeeping, based on accounting, the Federal Reserve on their balance sheet, on their books, they can't have a $35 thing replaced for a $4,000 thing without having something offsetting that to cause that transaction to happen. So what they would have to do then is print the difference and then hand that money to the Treasury. And so they give the Treasury something worth $35. They get back something worth $4,000. And then they also, in exchange for that, hand the Treasury the difference of, basically $4,000 per ounce. That would be about $1 trillion of printing at today's prices. So it wouldn't really move the needle for anything. It's not even going to cover a year of deficits for the government's run rate. So it's like, there's not really a reason to do a gold revaluation to mark-to-market gold. The Senate just a couple weeks ago voted down doing that to buy Bitcoin. There was a bill in order to do that and use that money in order to buy Bitcoin. That was voted down. So that's not happening. I believe that was voted down. I might be wrong about that. And so for anything else, it doesn't move the needle. It's $1 trillion. They've got $38 trillion in debt. They run $2 trillion deficits every year. It's like, what's another trillion? It's nothing. So gold revaluation is not going to do anything. And then just declaring the value of gold higher also wouldn't do anything, because at the end of the day, it's not going to change the free market exchange, the what the gold actually trades for on the open market, which means everybody just sees it for what it is, which is just a money printing scheme. So it's like, if you're going to do that, then you wouldn't do that. You would just borrow more and force the Fed to do QE to monetize that debt, and you wouldn't do it all at once through like a gold. It just doesn't. It just wouldn't solve any of the problems in the way that a lot of people think it would. Um, so I don't see them doing that anytime. Okay, let's see here. All right, the market is closed now. Let's see where everything ended. All right, Bitcoin, we're at 103 still. Gold, we're just a tad bit over 4,000. Silver, we're at 48.34. Um, oh, are we back? Are we back? Man, I'm sorry, guys. Like I told you, I'm new to this streaming thing. I don't know whether I'm doing something wrong here. Maybe it's just Chrome just kicked me off for some reason. But what I was going to say right before it froze, when I was like, "Oh, nice," it's just the market, the S&P 500 closed a little bit higher than yesterday's close. So we technically had a green day today, even though it had a big dip down. It came all the way back up. So not necessarily super bullish, just because it's coming off of the backs of, like, some very aggressive selling over the last, week or so. However, it is, when you see a candlestick like that, where you got a green top and a big long wick underneath, and it closed higher than yesterday's close, it's a good indication that the worst of the selling could possibly be over. So, anyway, that's what I was saying. Oh, nice too. Is I looked at the chart. So, all right, it's been over an hour here. The market's closed. I will be ending it now, but really appreciate the questions here. Lots of good questions today. Fun time, and I'm trying to do these live streams more often. They're always going to be around market close time. So if you're watching out for it, that's roughly the time of day that it will be. So hope to see you guys on the next one. See ya.